Hello, today we will consider the equity market rally that has been going on since late December and try to understand how much potential it still has within it. And if, over the next few weeks, an intermediate top could not materialize, leading into some consolidation into April. We'll look at our FinGraphs platform to study these trends. So first of all, we look at the S&P 500 on an investor's view. The investor's view comprises three charts: a long-term one, a weekly chart, which basically gives the perspective over the next 2 to 4 quarters, a daily chart with daily data, which basically gives us the perspective over the next 2 to 3 months, and then an hourly chart, which basically gives us the perspective over the next few weeks. Now, for now, the weekly is still in a consolidation from the tops it made last October. That consolidation did reach a support towards the lower end of our corrective targets to the downside and has since been rebounding quite strongly. So for now, it is a consolidation in an uptrend which may be still valid. So we haven't been able to confirm that the long-term trend has turned down. And over the last few months, we've seen a huge rebound which made it above the corrective targets of the daily, which is now eyeing impulsive targets to the upside in the 2.9 and possibly 3,100 levels over the next few months. So it's probably not for next week, but could happen over the next 3 to 6 months. Our risk index is still in the middle of the range and still heading up. And so for now, there's not a significant stress on the risk side for this rally for now. The hourly charts, on the other hand, are still uptrending, but are approaching our impulsive targets to the upside, and so maybe starting to get a bit overextended. We'll look at them in more detail with this zoom, and as you can see, we have possible targets over the next 1 or 2 weeks towards 2,830, where we pretty much are today, and possibly up to 2,872. So that would be the potential in the short run. The risk index was very overbought a few weeks back, then corrected down, very oversold about a week ago, and now is heading up again. It's losing a bit of momentum as we speak, but should continue over the next week or so to become overbought again. So still a bit of potential to the upside, but we believe that by the end of March, at the latest early April, we should see another intermediate top leading possibly into several weeks of correction to the downside. Now we look at the Euro Stoxx. Well, the Euro Stoxx is still in a downtrend on our weekly charts. It is also seeing a very strong rebound at the moment, which we can identify here on our daily graphs. The risk index is also pretty much in the middle of the range, so not an exaggeration yet. And the potential could be towards the 3,500, possibly up to the 3,700 range. So that's quite a comeback. That said, also here, we don't think it's going to happen over the next few weeks, but could take several months to materialize. And in the meantime, the hourly graph is looking quite extended also. So we'll also zoom on that hourly graph. And what we can see is that our impulsive targets to the upside have been reached. Our envelopes are touching each other quite extensively, and our risk index is in the overbought zone. There might be another week, maybe 2 weeks of upside possible, but on the target front, it's going to be hard to achieve much higher levels. So also here, the trend up is getting quite exhausted. In terms of risk reward, it's less interesting, and we also expect towards the end of this month, possibly early next month, an intermediate top and several weeks of consolidation. Now, going on to the Euro-US dollar, we can see that we are still in a very long-term downtrend since the years of 2015. We've had a very strong rebound in 2017, but all in all, we still consider it as having been a corrective move. Since then, the Euro-US dollar is heading down again in a downtrend. We're pretty much in the middle of the range, and the risk index is also in the middle of the range and not oversold. The daily graph may be, on the other hand, approaching an intermediate low. We can see that the risk index is close to the overbought zone, and our targets to the downside are not yet fulfilled. We're going to look at it in more detail in the Zoom, but just quickly focus on the hourly graph. The hourly graph has just bounced. It made it into our corrective targets, and in our view is now hitting quite strong resistance around 113.50, 113.60. So we would expect it to stall at this space and probably initiate a retest down over the next week or so. Why do we believe that? Is that our daily graph is still downtrending, but still has a bit of time in front of it, still has targets or potential to the downside between 112 and pretty much 110, and the risk index is just starting to be oversold and could still retest once or twice here. So our view is that we could see a last retest down, possibly towards the end of March, early April, and into the 112, 110 range on euro-dollar. Now we look at dollar-yen. Dollar-yen is showing a very aggressive projection here on the weekly, but our interpretation is that we never really made it above our corrective targets to the upside around 116, and that this move up since 2016 has been pretty weak and can be considered as a correction. So we would still see our first targets towards this envelope around 116 before being able to consider anything more meaningful. So we are in a correction up, and in that correction up we saw a strong move down towards the end of last year and a new bounce, which is also coming into our corrective targets to the upside and into its resistance zone. Short term, it might extend slightly longer. We can see we're still in an uptrend, and our targets could still justify a push into the 112.50s, perhaps a bit above that. On the risk index, we've come down a bit, which may justify a base to move higher over the next day or so. So in general, we're getting towards our targets on the daily and to strong resistance, but the hourly could still push slightly further. We'll just look at the daily in a bit of a zoom, and we can see the rebound here into the resistance zone, and that resistance zone is being worked as we speak and has an upper boundary around 112.40. So that's going to be hard it's going to be hard to make it over it in the immediate future, and we could probably see a last push up and then some retracement during April and then a second attempt during late spring to the upside. Finally, we also look at gold. Gold has been in a range, quite a wide range on the weekly graph over the last 2.5 years, 3 years. It has just seen a leg up here from the fall last year. That leg up doesn't seem quite over yet, and we'll zoom on it in a minute. Short term, we would expect this uptrend to resume up, and so we look at our hourly chart, which wasn't oversold about 10 days ago, has rebounded, but is still below our corrective targets, which are about 113.20. And as long as we don't make it above these levels, we cannot confirm that we get a new acceleration up. So our view is that we're probably going to work this zone another week or so, probably towards the end of the month, and then only in April we'll be able to start accelerating up again. And if we do look at the daily here, we can see a nice intermediate top here with our envelopes almost touching each other, the risk index well in the red, but the trend doesn't seem over yet and could still extend into the 1340, 1390 levels over the next few months. Our view is that this consolidation is a bit short considering the uptrend that we've had, and so we would see more work here below 1300 over the next 2 weeks perhaps, and then finally an acceleration up to retest the tops that we had mid-February. And so that's it for gold and for the markets this week, and thank you very much.